Hello folks, welcome once again. Today I will discuss an approach that is used by almost 90% of the professional profitable traders. This approach is not only glorious in theory, but it is tested with time to time. And almost all the traders and everyone in this field agrees that this approach is the key to profitable trading. As you would have seen the name of this approach from the video title, which is the DEER approach. The word DEER is made up of 4 alphabets and it is actually an acronym. The abbreviation of DEER is direction, entry, exit, and risk reward ratio. Before showing you how to apply this approach on chart, I will show you some simple points and will recommend you to write down these points with yourselves. It is the DEER approach. The DEER approach should be applicable on every strategy, and every strategy have to give you answer of 4 questions. What are they? The first one is D, which is direction. Whenever you want to enter, you should ask yourself, what is the direction of the market? That is the first question a trader should ask himself. The second one is entry. At what price to enter the market? And the third one is exit. Where to exit? And lastly, the fourth one is R, which is risk reward. How much to risk and what should be the risk reward ratio? These are the questions every trader should ask himself whenever they enter in the market. Now let me show you how to use this approach in trading. The reason I showed a clear chart is that I want you guys to understand it better. So what was the first question of the DEER approach? The first question was the direction. We can clearly see the market is making higher highs and higher lows. So the direction is upward and the trend is uptrend. So it was the answer to the first question, direction. Okay, now let's move toward the second question. The second question was, where should we enter? So, as I have said in the previous videos too, that we should not enter on the basis of our intuitions. We should ask ourselves that is the market on the key level? Is the market on support? Is the market on resistance? Is the market on flip zone? Or is the market on trend line? Here we will see where should we enter and we will see the key level of the market. We are about to find the answer of our second question. Let's say we were about to enter at this area. So we should have asked ourselves the direction, which is obviously upward. We should have asked ourselves where should we enter the market. So it was a good area because it was a flipped zone. You can see this area was serving as a resistance and the market broke this area. Now this area became support. Okay. And further confirmation is So this was our answer to the second question. Now we will find answer to the third question, which is exit. So as we can see, we should have placed our SL stop loss below this low, the one which I am indicating here. This is the low, and our SL should be below this low which I am moving right now. This area should be our stop loss point. Okay. So, and where should we sell our take profit? So according to the chart, I would have placed it at this area, because this area is a resistance area. The market touched this area 2 times, so it should have been my first take profit area. Okay. The second take profit area should be this high. So it was the answer to the third question. We should always take our take profit areas at resistance areas or support areas, the key levels, and not beyond or below it. So now let's move toward the fourth question, which is how much should we risk and what should be our risk to reward ratio. Let's say our account capital is 10k. We are having $10,000. Then, being a mentor, I will highly recommend to not risk more than 1% of your capital. And the 1% of 10k account is $100. So let's say we are risking $100 here, which is about 78 pips, and we take our entry after the formation of the pin bar, and we are targeting the first resistance area, which is 250 pips. The stop loss is 75 pips and the TP is 250 pips. So here we are having risk to reward ratio of almost 1:3. If let's say I am targeting the, let me remove it so it won't confuse you. Now let's say I am targeting the second resistance area, which is almost 360 pips. So here we are having almost 1:5 trade. We are risking, according to that 10,000 account, we are risking $100, and for the reward of $500, or for the first resistance area we are risking 1% for 3% reward. And I would say that is a very professional risk to reward ratio, highly recommended. Even if you are using 1:2 risk to reward ratio, it is still great. Now show me another example on a different chart, which should be USD JPY. So what was the first question a trader should ask himself before entering the market? The first question should be the direction. We can clearly see the market is in downtrend because of the reason the market is making lower highs and lower lows. So we found the answer to our first question. Now, what is the second question, which is entry? Where should we enter the market, and at what price we should enter the market? So let's say we found the first answer, which is direction. Now we are targeting this area. We want to enter market here on this engulfing pattern. So it is a great area to sell the market, because the market is at the same time, the market is on the flip zone from this key level low to serving it as a resistance and this previous high too. The market came to retest this area and formed this engulfing bar. So this was the answer to our second question, which was entry. So we should have entered the market after the formation of this engulfing candlestick. What is the third question in this approach? The third question is exit. Where should we exit? As I said, we should always target the key lows or the key highs. Here the key low is this area. So let's say we should have place our SL above this engulfing bar. So how much we are risking? We are risking 185 pips. And how much we are gaining if the trade moves in our direction? We are gaining almost 340 pips or 350 pips. So we can see here we are having 1:2. The risk is 1%, which according to the $10,000 account is $100, and here we are gaining $200 as a reward if the market moves in our direction. So we discussed the direction. What is the direction? A trader should always look at the direction of the market, and a trader should know how to identify a trend. What is a trend, and what are the criteria that make it an uptrend or a downtrend? The second question is, a trader should ask himself where to enter the market. Third one, where to exit. And the last one is, what should be the risk to reward ratio, and how much risk a trader should risk on a single trade. This approach is extremely professional, and if you implement this approach correctly, you will see the change in your trading. You will see the results. For such content, don't forget to like and subscribe my channel. See you in the next video.